Well, thank you everyone. And this should be a really interesting, to Ian's point, continuation of the panel that just completed. As Ian also mentioned, it was a macro discussion of what cities and municipalities and governments and how everyone can work together. We're going to take a very, very micro approach and focus our time on the public finance mechanism. How do cities and towns raise money to support those constituents, to support new projects, to just make everyone's environment a better place to live. So Justin Nadile, founding partner at Blockwise Advisors, also proud member of Cubic Labs, which is the organizer of this event. So very, very happy to be part of that. And I do want to ask my two panelists to introduce themselves. Eric, if you want to start down the end, but just a quick thank you as being such a gracious host, the city of Quincy, and for your generous support for an event like this. So just a very quick round of applause, please, for the city.
That's good.
Thank you very much.
People hire to do that get this stuff done.
Yeah, no, that's right. And then Paolo will go next. And I think, Paolo, you probably have the award for the longest distance traveled, I think, to attend this event. So
okay.
We're incredibly grateful to have you and Pietro here.
Thanks for the invitation.
As well. So,
it's a pleasure to be here.
No, that's great. So let's dive into quick introductions. Eric, if you want to start, and then we'll move to Paolo.
Yeah, absolutely. My name's Eric Mason. I'm the CFO for the city of Quincy. My educational background is I went to West Virginia University for both my bachelor's and master's degree in economics. I've always been very interested in the decentralized space and the financial markets. I've been lucky enough to been serving the city I've worked for the city for 8 years, serving as a CFO for 3 years. So some quick math, I took over the CFO ship right in the middle of the pandemic. So technology had to be something very important to us to keep the city rolling. And it kind of progressed very quickly into this discussion we're having today. But I've been very fortunate to work for Mayor Koch and work with Councilor Ann Kane, who really helped put this together. And I'm excited to be up here, excited to talk.
Good. Paolo?
Yeah, I'm Paolo, Deputy CFO of the city of Lugano. As Pietro mentioned in the previous panel, Southern Switzerland. Beautiful place, but yeah, thank you very much for the invitation, because you also have a beautiful city here. Great region. Thank you very much for that.
And I do think it's important to point out there are a lot of similarities between Lugano and Quincy as far as population, city budget, size of the debt, as we'll get into all those sorts of things. So a nice counterplay here between the two
I think it's a good point, and we have a lot of similarities, so we can do a lot of things together. Even in the future, why not?
Absolutely.
Good. All right.
Yeah, my background is in finance. I studied finance at the university, then MBA at UC Berkeley. In the middle of the 90s, so in the middle of the rise of internet. I'm a passionate of computers and technology since the beginning of the 80s. I was a very little kid, so I grew up with technology. So when I went to Berkeley, internet was there. I got passionate, did also a startup in internet, and then later on blockchain, got passionate by blockchain and crypto in 2016, and also helped to found a blockchain startup in Milan in 2018. From the professional point of view, I've been an entrepreneur for the first 20 years of my life. Then I passed, I got hired by a bank, first as a risk officer, and then head of retail banking in Southern Switzerland for a large bank in Switzerland. Then I passed to the public sector. I became treasurer of the state of Canton Ticino. As Pietro mentioned, it's the local state, like the Massachusetts, but with the right proportion naturally, but it's the local state of Canton of Ticino. And finally, I reached the city of Lugano as deputy CFO, and exactly at the right time when the city of Lugano was starting all those blockchain projects. So I'm very happy about what I'm doing today.
Yeah, no, that's great. And just a quick little pitch for everything that's going on over in Switzerland. There's great programming throughout the year. There's a lot of funding available for startups and education. And so I'd encourage anyone that's interested in learning more about Plan B and what's going on there to connect with Paolo, connect with Pietro while they're here with us. So.
Yes, Plan B is not an alternative plan. The B is the B of Bitcoin, which is a very strong message to the community. We have a lot of, let's say, important topics we want to develop, and we are developing. We don't have the time to talk, but just take a look on the internet. You will find all the information.
Sure, fantastic, great. So as I was thinking about the preparation that we were doing for this panel, and why is this interesting? Why should we even be talking about a market like municipal bonds? In addition to it just being a great segue from the prior panel, and for me personally, and obviously we can dive into your thoughts as we go. It's just a massive, massive market, a massive capital market that is incredibly ripe for disruption. Depending on the year, in the United States alone, there's somewhere between 350 and 400 billion of municipal issuance every year, right? That's a massive market. I think as we'll dive into today, it's also ripe for disruption in a sense that a lot of the technology, a lot of the infrastructure, a lot of the process was developed 20, 30, 40 years ago, right? There's been very, very little innovation. And so, when I think about big dollars and I think about old technology, you put those two things together and boom, disruption, but also hopefully value creation, right? It's not disruption for disruption's sake. It's how can we create value for the people that are most important, and in this case, it's constituents, it's citizens of a city or a town in which people live. And so I think that's why this is such an important topic to understand, and to understand how blockchain or other distributed ledger type technologies can better enable this process, allow for cheaper, more efficient, more access. Again, all things we'll get into, but just a really interesting market that tends to be overlooked in the grand scheme of blockchain and crypto. So we're excited to dive into all that. But I would like to start with the basics, and I do mean basics. And so Eric, why don't I ask you the question to kick us off here, just to give us a domestic perspective, and then Paolo, if you want to add any differences from Switzerland. What is a municipal bond?
Yes, some Tim Duncan fundamentals right there, so I'll definitely take that. So municipal bond is a debt vehicle that is issued with the assurity of a municipality, or the most local form of government, whether it's local government or it's county government. And it's backed by the collection of either an independent revenue source, like say parking receipts, or on the city's ability to tax, or to collect property tax. It's one of the oldest financial vehicles that exists in the United States. Municipal bonds well predate the founding of the United States. They predate the writing of Adam Smith's Wealth of Nations. But it's one of our fundamental securities that we have in this country that both provides funding for public investment, but also provides tax-free growth and income for holders of the municipal debt. So I consider it one of the obviously I'm very biased, but I consider it one of the pillars of the financial market. But yeah, I think it's the starting block of all kind of discussion on debt.
In Paolo, we don't have to get into all the nitty-gritty details, but just from a conceptual perspective, any differences or anything you'd like to highlight from how things operate in Switzerland versus here in the States?
I think Eric gave a perfect explanation what a bond is. Maybe I would just add in Switzerland, the minimum size to go to issue a bond on the stock exchange is 100 million. So everything else is micro bonds. So you need some, big debts, and as the City of Lugano, we have 900 million debt, which is not huge, but for the size of the City of Lugano, it's considered a kind of high level of debt.
Got it. All right, that's great. And before we dive into where you are each respectively in your journey, right, as far as tokenizing municipal bonds, maybe let's just touch on why this financing mechanism is a great candidate to be tokenized, right? And we could differentiate between partially tokenized, fully tokenized, permission blockchains, public blockchains. We don't necessarily have to get into all that, but just as a concept, as a finance mechanism, why should this or could this be tokenized? What are the benefits that could drive from it? And then we'll go from there.
Really?
Yep, Paolo, why don't you head?
Well, I think the first point is efficiency. As you said, the process today is really costly for the municipality, for the issuer. The banks earn a lot of money on that, probably because they do, kind of hard work to issue that. But at the end of the day, everything could happen easily, smoothly, and with less costs. That's the first point. I think efficiency is really something interesting. I would add something else for the future. Maybe it's a strong statement, but with the blockchain technology, we can probably issue without the need of an intermediary, which is the bank, right? So if you cut off the intermediary, then you can reduce costs even more. I'm not telling you have to cut off banks, but banks should try to understand that this can disrupt their business, so they should get into this technology and try to be more efficient on that and give this gain in efficiency back to the issuer. I think this is a very important point.
Yeah, just to echo that, I can't agree with you more. There's so much inefficiency. There's so many parts that can be modernized, automated. So much of issuance costs is redundancy. I think a lot of people in this room, and I certainly know everybody up here, we hate redundancy. I mean, I think that's why we're here, is that we don't like the idea that just to repeat an action, just to pay somebody else extra money, to have the same thing that could be replicated in the data stored on the same transaction. But why I think it's so good for disruption and tokenization is scale. There's $10 trillion in outstanding state and local debt in the United States right now. I don't know if there's any other market that has legislation that's older than I am and $10 trillion and nobody incentivized to look left or right on ways to make it more efficient. And we have a great tool sitting here that's able to provide a level of security that regular debt just really doesn't have the ability to do. And to have those two opportunities sitting beside each other, that you can both have enough investment and scale to invest in these systems, mixing in with the stability that's offered through municipal bonds and the stability and security that's offered through blockchain. It's kind of like they're made for each other. I would argue that the other side, from the cryptocurrency viewpoint, that a lot of the municipal bonds actually better marry the allegiance to security than some of the other tools we see blockchain being used for right now. But I can't agree with you more. It's the efficiency. It's absolutely efficiency.
And maybe I will add a very important point too from the investor side. If I issue 100 million bond and 5 investors buy 20 million each, they will basically tell me the price. I mean, the bond price is, the coupon is set by, the normal rate, and then you pay a spread based on the risk of the issuer, so the risk of the city. And actually, the higher the spread, the higher the risk, the most costly is the bond. So basically, if you negotiate with 5 investors, well, they will tell you the price. Yeah. Imagine if I can issue a bond now in 10 minutes or in an hour, instead of having 5 investors, I have 1 million investors giving me only $100 each. I can tell them the price, so I can reduce my spread. They will be happy because today they cannot buy my bond because the minimum size of buying a chunk of a bond to us is 5,000 francs. But I know bonds, the minimum size is 200,000. Right. So not everybody can buy it. So we can democratize the bond. I can sell one small chunk to everybody, and then a smaller price for me, so a less cost for the community. That's a very important point.
And that actually stole a little bit of my thunder. I was going to touch on how accessibility or democratization of this mechanism plays into motivations here. Thank you for those insights, Paolo. How about Eric, from your perspective and the mayor of Quincy's perspective, how does democratizing access to that public finance mechanism, where does that fall on the priority list, and how does that play into motivations here?
Yeah, absolutely. I think the key words right there, we're at $5,000 per bond offering, also per segmentation. It is that word, it's democratization. The role of government is not to pick winners and losers at any level. It's to allow the best access to everybody. And right now, because of the high issuance costs, because of some of these redundancies, not everybody has access to it. Right now, when the city of Quincy sells a bond, over 50% of the bond is bought by SMAs, are bought by people who, just because of their wealth, have better access to the market. By adopting blockchain, we can open up Quincy investment for Quincy people, that we can allow somebody with a self-directed 401k or somebody who just has $5,000 in their pocket to be able to participate in the investments of their community and reap tax-free income from that investment. And I think that's really important too, because I think one of the best things that government could do is not just make good, solid investments like the park we're sitting in right now, the garage across the street, or a brand new school, but allow the people in our community who are going to pay that bond back to participate in those advantages. Right now, 9% of all money collected through our tax revenues goes to paying interest. What if we could keep 9%, approximately $21 million, in the community? That's what blockchain gives the opportunity, and the democratization of blockchain allows us to keep that money in the community.
And just to be clear for the audience here, what you're hearing is this desire to increase accessibility. Yeah. The reason that we really can't do that today is because of the legacy technology, the legacy infrastructure that's in place, right? And as great as it is in theory to say, let's open this up, Quincy bonds for Quincy people, without the use of blockchain or other DLTs, it's just literally not possible, right? It is not technically feasible to do that.
It would cost too much.
Yeah, it would cost too much. The processes aren't set up the way they need to be, and so, I mean, that is a critical component of increasing that level of accessibility is this new technology, this new innovation that will actually allow us to do that more than conceptually, right? And so, that's good to understand. One thing I want to ask both of you now, we can get into where you are in your journeys, along the tokenization route, if you will. And the reason that we have Paolo here today and then Eric here today, in addition to just being fantastic panelists, of course, is that they are at different stages in the journey, right? And I'll let them go into it in a moment, but Paolo, I think it's fair to say that as part of everything you've done over in Lugano, you completed, I think, what is the world's first tokenized municipal bond issuance? You could correct me if I'm wrong, but I think generally that's how I've always viewed it, and I think generally that's fair. And then just, Eric, for you're in the very early stages, I would say, of understanding how you should do this, getting advice and thoughts from folks like Paolo who have gone through all that before. So maybe, Paolo, you can just give us some insights into exactly what you have accomplished when it comes to this finance mechanism. Sure. And please tell me if I'm wrong if that was a misstatement.
No, it's correct, but I need to give some more details on that.
Sure, please.
It is true in the last, let's say, 5 years, I think, other digital bonds have been issued on the market, but this is why it came on the statement. I come back to the statement you said. My bond is really the first full characteristic bond, which means it's really like a traditional bond. It is digital native digital, sorry. It's transacted there. He has a secondary market. He is recognized by the Swiss National Bank in the global collateral basket, which is a basket of assets that banks use to get money from the national bank, so from the Federal Reserve, for instance. So this is the really first one there. And then you can transact clearly on the stock exchange. And actually this bond has something future more than a traditional one because it's traded and listed in 2 stock exchanges, the traditional one and the digital one. And actually the bond is born in the first fully regulated digital platform in the world. So I would say it's the real one, right. First one. But there are many others. The European Investment Bank has done already 3. But this is kind of, they issue the bond, they tokenize the bond, and then you have to keep the bond until the end. So there is not a secondary market.
Right, exactly.
So I would say this is really the first, full characteristic bond.
Yeah, it's concept into practice, right? Which is incredibly exciting. And I think important to note that, correct me if I'm wrong, but the rate that you're paying on the bond was about the same, if not equivalent, to traditional bonds, which is obviously very important. You don't want to increase risk because of just new technology, right?
That was a big issue. This bond was a very big issue and a lot of work to do because you have to take into consideration that normally takes me 4 hours from the time I decide to issue a bond. I ask for the offers. The banks give me the offers, then we open the book and we close the book in 2 hours. 400 million is very easy, so 4 hours. This time it took me 3 months.
Got it.
Because the stakeholders are around the table where the city of Lugano, Zürcher Cantonal Bank, which is a large bank in Switzerland, was the lead manager, so a bank, I need a bank to do that. The SDX platform, which is the 6th digital exchange, this is the world's first fully regulated digital platform. And then Moody's, who is our rating agency. Mm-hmm. So actually nothing more traditional than those stakeholders, right? But this is completely new because it was done on everything in the blockchain. So the discussion was more on the risks about the bond. So Moody's really went deep down in the technology, deep down in what we were doing, why we were doing that. So we spent 3 months in meetings, very interesting meetings, tough meetings. At one point, I chatted with my bank, say, we are done. We are not going to do that. I mean, no, they will never say we can do it. But finally, Moody's said, okay, we analyze everything, and there are no additional risks because you are doing in this platform on the blockchain.
Right.
So just to be clear, Moody's said in this platform. So they analyze this platform. Maybe in another blockchain, they have to reanalyze the blockchain. But for this platform now, everybody can issue a digital bond, and it's really like few hours. So now I can do it again in few hours.
Great. And then just one more quick question for you, Paolo. How about, it's great to build out the supply side of this market, right? You have an issuer, you want to issue a bond, that's fantastic. There can be complications on the demand side for investors that actually need to hold a digitally native asset. I know there was some benefit of the dual listing here, which maybe went around some of those problems, but what was the process like as far as generating interest on the investor side to actually hold one of these assets, something very new and very novel?
That's a good question. As I say, normally 4 hours to issue a traditional bond. I don't even ask the investor if they are there because they are. So everybody's waiting for bonds from the cities and the cantons because they are very high level rated. This time was kind of, the time I spent with Moody's and the platform and the bank discussing this. We decided with the bank that maybe the investor were not there and buying a complete new digital bond on a new technology, and the custody is done in another way, as a traditional way. So we decided to make an investor call, like a roadshow. Yep. We invited 25 big investors, among the biggest in Switzerland, and I presented, the plan B, what we are doing, why we are doing that. what Moody said, and the fact that I was waiting for them in this new technology because we need to adopt the technology, to make the future. So I really ask like this, please buy this bond, not because it's me, but because it's a digital bond. It's the first one. Do it because you will learn about the process. I will learn about the process. And after that bond, everything will be normal. And actually, the investor bought it in an hour and a half, 100 million, 1.5. Everybody was happy. And I was also more relaxed at the end. Yeah, sure. That was a risk there.
Yeah, fantastic. And Eric, so in your case, I think it's fair to say that the city is considering tokenizing municipal bonds or exploring that process and the benefits of what it could bring. So maybe just tell us a little bit, to the extent you can, around what that process has been like as far as who were the folks on the city side that had to sit in a room and say, okay, we want to explore this. And then what does exploration actually mean to you as far as understanding, if we are to do this, what is the path forward, who are the partners we work with, et cetera?
Yeah, absolutely. I think anybody who works in government, whenever we want to branch into something new, we need buy-in and we need support from the policymakers. I'm not a policymaker, I'm a technocrat. I'm much more entertained with spreadsheets than I am with, sometimes the political maneuvering that has to occur. And we were very fortunate to have a mayor and a very strong member of our city council who wanted to adopt these. Mayor Tom Koch, Councilor Ann Kane, who like innovation, who don't shy away from exploring something new. That is where 90% of municipal projects die, exploring something new. You're a municipality, you have no competition. You're not a business. There is not a second government option in Quincy, it's just Quincy. So there's no incentive to explore new options. So to have the political support to start this discussion is invaluable. And then we couple it with Justin's team over at Blockwise, because we need to bring in expertise. Government's great at putting out fires. It's great at educating kids. It's great at paving roads. It's not great at adopting new technology. It's not in the States, so it's a little different. So bringing on community partners like Blockwise, who are invested in Quincy, who want to see the city of Quincy succeed, and have them come on board and guide us through this process and have us understand what are the pros, what are the cons of this offering. Because here's the thing, we can sit here and say blockchain's the best thing in the world, it's the best municipal, it's flawless. It's not. Everything's a trade-off. I'll tell you right now, from my early experience with this, the pros vast outweigh the cons. And I think you said it better than I'd ever be able to say it, why it does. I think it's democratization, I think it's efficiency. So being early in this process and really trying to explore what this new technology means, we kind of feel, Justin Gerken Moronga, it feels a little pioneering. I kind of almost feel like we're the first people to get in a car.
There's a little bit of Wild West kind of feel, pushing towards the horizon.
Yeah, it's
very new.
Being in a horse and buggy, it stinks a little bit, but you know how it works. Car's a little scarier.
I know. Although we may be going right to fighter jet. Yeah, we're supercharging everything here, but.
So early on in this process, it's exploring how do we make sure this product's helping the city, and by helping the city, I mean the people. How does it give us better interest rates? Does it democratize it? Does it give us better access to market? Does it give us more financial and cybersecurity? We're all sitting in a room knowing that it's a joke to compare regular bond issuance in terms of security to a blockchain. Just that there's not enough raw computing power in a lot of cases to corrupt certain blockchains. It's just a better securitization. So in our process, we're in the early phases of understanding the landscape and how municipal bonds can fit in there, both within a financial strategy, but also within the regulatory environment. I got to say, Blockwise has been very helpful in that standpoint of understanding who do we actually ask questions to, because government moves slow, and it moves even slower at the federal level. So a lot of times we are disruptive just by asking questions, not even by action. And I think that's been the funnest part. But I'm a little bit of a disruptor by nature, just a little bit.
But no, that's great, Eric. And just to touch on something you said around sort of innovation being sometimes very difficult to come by in the world, the public sector world, right? For all sorts of reasons, some better than others, of course. But given that I am seated here with two very, very innovative municipal leaders, right, particularly at the intersection of finance and technology, I mean, what message would you give to your peers as far as how willing they should be to lean into something, whether it's blockchain or not? I mean, it's the point sort of moot, right? How do we get more cities and towns to innovate and use technology to innovate? And maybe, Paolo, I'll start with you as someone who's gone through a big part of this process, and then Eric will get maybe your closing thoughts from there. So.
Well, I think the first message is when a new technology comes up, take it a look, try it, make some tests, adopt it. The adoption doesn't have to be forever. Just adopt once and try to understand if there are benefits. Then you build on this. So the learning curve is really high when you do 1 or 2 projects on that. And then it's very easy because you can also think, okay, we failed on these 2 projects, but I can use the technology for something else. So as the city of Lugano, we have done many experiments now, which are no experiments. I mean, real use cases. So I would name these use cases instead of experiments. And now we can really open up and say, okay, let's sit down and what we can tokenize or how we can apply the technology, how we can expand the Luga token to make the citizen benefit more from that. And there are so many ideas coming on the table. We don't have the time to do everything, but we are selecting some very interesting projects and sometimes extremely innovative. So I'm not scared, but like, wow. Yeah. Wait a minute, we have to think about it.
And with a lot of this new technology, particularly blockchain that tends to be more open source, less expensive, easier to develop, you can experiment, to your point, relatively inexpensively and do so in a sandbox environment so that you're not necessarily putting something into production that's going to affect a city process. And so the ability to experiment now, I'd say, is dramatically increased from 10, 20 years ago when it comes to this market. Eric, why don't you provide some words of wisdom to your peers, if you will?
That might be a little hard, but what I'll say is, don't be scared of disruption. Don't be scared of, I'm going to use the word scared, but don't be scared of new technology. I tell people a lot, there's one adage I love, which is the hardest time to do something is the first time you do it. The first day of your job is the most stressful day of your job. The first time you adopt new technology, that's the most painful point. Don't get turned off by that being the most difficult aspect is that first day, because it's like learning anything new. Once you get better at it, you gain more efficiencies, you become better at being able to adopt stuff. Outside of blockchain, one of the things I have a lot of discussions with other people at the municipal level in the state is the adoption of advanced analytics. You can download our program for free. There's nothing that costs to adopt, any computer can host R. You can bring in real econometrical analysis and real KPI and FP&A to your process like you do in the private sector. And I hear some of the not complaints, but some of the hesitation I hear is, well, what if I don't know what I'm doing? And I was like, well, you're not gonna know what you're doing if you're just sitting there ignoring the technology. And being able to adopt this is really gonna put you in a stronger position. 30, 40 years ago, I remember the previous CFO I worked for, he talked about driving down to New York and having to manually sign bonds. And now we do digital bond offerings, or everything's done digitally, you just sign the bond. And I go, well, the next step is this. This is the next step. Whether municipalities want to admit it or not, 20 years from now, they're going to be doing what you're doing. They are. So adopt it early. Work out the problems now, because you'll benefit down the road. There's an investment to be made today to reap tomorrow.
Okay. Fantastic. I think that about wraps up the programming here. So I think we have time for maybe one question if there are any, and if there's a mic to pass around. I think both folks will be around for a little bit afterwards if anyone wants to say hello, but certainly open to a question if anyone has one.
What worked?
Say that again? Sorry.
You had to convince a room full of people to do anything like this. What was the line that worked?
In one line, how did you convince people to get on board with this process?
I like that question.
Just do it.
So you wrote the Nike slogan. I like it.
Just the Nike slogan. That's all you need.
Technology is there. It's working. I did it for 100 million. So I took all the risks. Now you don't take any risk more because it's there. So that's it. Just adopt.
I like that.
It's been proven, right? So it works. It can be done. And I think just we're all very hopeful that other municipalities, both abroad and here in the States, adopt the model of Lugano and some of the innovation that is happening right here in Quincy. So,
for what I know, I think the next 6 months we will have 3 or 4 bonds coming on the platform.
Good. Well, fantastic. Well, please keep an eye out for developments for both Quincy and Lugano. But thank you so much to the panelists. We really appreciate your time.
Thank you, Justin. I appreciate it. Thank you.